what do we have here? What are the most common mistakes customers make when shipping internationally in Asia Pacific? And a really common mistake I think the customers make is they sometimes either don't provide us a commercial invoice or they provide an incomplete commercial invoice.
One that's very dear to my heart is having the right permits and licenses in place. So knowing what restrictions there are and what permits requirements you have to ship into markets, and also export from your own country as well. So that's one big thing I know there's a lot of problems with.
So another idea that I have that's important is Incoterms. For those who don't know, Incoterm is basically a term that you use for shipping and who has a responsibility and liability for the goods between the buyer and seller. So for us as customs brokers at UPS, we only know what that relationship is when an Incoterm is on a commercial invoice. And so that's really important, and often customers don't get it right, or they don't put it at all.
So here's another one, which is a common mistake. Customer likes to declare items as free, gifts on the commercial invoice, but at customs declaration, during customs declaration, everything has a value to customs. So even if it's free, please indicate an amount so that it helps the customs broker declaring that item into the country.
In the eyes of customs, nothing is free. Another problem that is very common is not providing the shipper or consignee details for the goods that are being moved. And that is a big requirement for customs authorities to know who is moving the goods around and who are receiving them.
It's also super important because if we have a problem with the shipment and we need to get in touch with somebody, either the shipper or the consignee, to get some information that might be missing about the shipment, we need to know who to contact to. So
yeah, one other thing finally is we see customers not accounting for the taxes and duties properly in their pricing, and that can have a big difference in terms of understanding how much shipments will cost and how much customs duties and taxes will be payable at point of entry.
So I do agree with you. A lot of consignee is frustrated with this as well when they receive this shipment and they are unaware that they have to pay for duties and taxes. So always take note there to include or at least inform your consignee that there are duties or taxes to be paid at point of entry. Courtney, would you like to take this question?
Okay, bring it on, Brendan. So a tariff it's I think otherwise known as a duty around the world, right? Duty, tariff. Basically what it is it's an additional amount of money that's applied to mostly imports, sometimes exports, when you're moving goods in and out of a country. So the whole idea of it, without getting too technical, is it's a way to level the playing field, as we say in the biz, between a domestic good, meaning a good that's, from a given country, and one that's imported.
Yeah, I agree. And one other important reason for tariffs is that it's a good revenue generator for governments.
For sure.
Most important.
Okay, so we talked a little bit about tariffs, but there's another charge that you should be aware of that might apply for your goods, and it's called taxes. So when we talk about taxes in an import context, we're mostly talking about consumption tax, which in most places is VAT or value added tax.
Or GST?
Or GST, that's true. So GST does exist in some countries in this region. Singapore is an example, Hong Kong, Australia, right?
Here's an interesting fact. Hong Kong doesn't have VAT.
Another interesting fact, Singapore has GST but doesn't have tariff tax.
So for those who are wondering who actually pays tariffs and taxes, it's actually pretty simple. The simple answer is that it depends on the Incoterm between the buyer and seller. And so as an example, Incoterms put different liability or different responsibility on the buyer and seller. For an ex-works, Incoterm is an example where basically the buyer is responsible for paying everything. That would include paying tariffs and taxes, right? But then if you have, DDP Incoterm is a different example, you would have the seller paying duties and taxes.
Or the shipper paying the duties and taxes.
Exactly.
So that's a great tip for business, especially small businesses. If you want to have great customer experience, always remember to include duties or taxes, tariff and duties in your pricing to your customers so that they are not taken by surprise on the price that they have to pay.
Different tariffs. So one of the reasons why different tariff levels are applied is that governments want to protect some of their domestic industries and make sure that pricing of goods that are imported are on the same level and have parity with domestically produced goods. So that can be one reason why certain types of goods have higher or lower tariffs applied to them.
It's a really good point. Another way to think about tariffs is it also depends, even for the same destination country, it could be different depending on the origin. And that could be because, of geopolitical reasons that change all the time, of course, due to relationships between certain countries. Meaning a country might say, hey, I really don't want goods from country A to come into my country, so I'm going to apply a higher tariff. Or, hey, I really want goods from country B to come into my country, I'm going to apply a lower tariff. So it's always very complex that we have to navigate every day.
So I think the lesson for business here is that for understanding tariffs and duties and how they implicate the price at destination affects the price, right?
It's true. If, some advice to all the customers out there is if you put in just a little bit of time and effort, of course, work with the right service provider, you can really reduce and save a lot of money really by sourcing your goods from locations that are favorable to the country that you're planning to import into. You really can save a lot of money.
There are two kind of methods that a customs officer would know what's in your shipment. One is when we do the electronic declaration to customs, where we submit information to customs. That's when accurate information on your invoice helps support the electronic submission to customs. The other one is when we do physical inspection at the customs border, where we actually bring your physical package out of the free trade zone. For example, in Singapore, you have your Changi airport. There are X-ray machines where our operations will actually clear the package through customs physically. And in some instances, we do also have open box inspection where customs will pick certain selected packages for 100% inspection.
So one reason for selecting a package to inspect more closely is that the original information was very vague or not truly descriptive of what's in the box. So that can trigger a customs inspection. Which can delay clearance.
Yep.
It's a really good point, David, and it's why it's so important to provide your logistics provider with really good and complete and accurate information about your shipment. Doesn't mean your package isn't going to be stopped and inspected, but I think I can say that there's a higher chance that it'll probably go through without any impact. So tariffs and taxes, it really depends on where you're sending your goods to, right? It depends on where you're sending your goods, what your goods are, if you're using free trade agreements. So it's a little bit complicated. But I think in Asia, there's a few locations that generally don't apply tariffs and taxes, right? So I'm thinking of Hong Kong and Macau as being one.
Yeah, that's right. They don't have any import duties or tariffs, and they also don't employ any GST or VAT.
Except for pesky excise taxes.
Oh yeah, the enjoyable things in life. Alcohol, tobacco, all of the good stuff. Those are the exceptions to that rule.
Singapore generally has only GST, which is 8%, and there's no tariff for goods coming into Singapore except for the special commodities like tobacco and alcohol, similar to what Hong Kong has.
I think the first thing to just clarify, tax IDs, what are they? Tax IDs are the business tax ID registration, and customs will generally want the tax ID of the shipper of the goods, and in many cases also the consignee tax ID in business registration number. I think in Singapore,
you
commonly
have
known as-
your UEN number, and for personal import, you can actually use your NIC number for declaration.
And tax IDs, they're used to identify the importer of the goods, and they can be used to streamline the whole post-importation tax collection process. So companies that are registered for tax registered in a country, they can pay taxes and duties that are due on that are post-importation in a lump sum on a periodic basis.
And for exporters, what it means is that by providing your tax ID, you are able to actually facilitates the export tax rebates that you have actually paid during your import.
So is it mandatory for international shipping? So there are some countries within Asia that have now made it mandatory, Indonesia and Vietnam being two of them. And what we see is a very clear trend that a lot of other countries around Asia Pacific, but generally the world, are now developing and implementing legislation to require tax ID information up front as well.